Disclaimer, the full content of this program is for education purpose only and should not be used as an investment recommendations. So if you have any investment decisions to make, you should consult your financial advisors. So as usual, we will just go through the market overview. Now, there's really nothing much going on between Dow Jones and S&P 500. As you can see that everything that is go right right now with Dow Jones and S&P 500 are all within the so-called uptrend channels. So there's no sign of bearish. In other words, it's all uptrend. So this is Dow Jones and this is S&P 500. As you can see, it's all within that trading trend, I would say, upward trend going forward. So if you're investing companies in both in the DJI and the S&P 500, typically your portfolio shouldn't suffer too much. That's how the market interpreted, or rather that's how I interpret it as well. All right. I think the difficult part is NASDAQ. All right. So no doubt it has been very, very tough for most investor or even traders coming in from March. I just spoke to one of our friends, Xiong Yo, last night, and he says that it's basically a very crappy March going forward. Now, in terms of trend, you can see that the right now NASDAQ is sort of like fall out of the channels, all right, and it's sort of like sitting at this line in between, flirting around this line 13,800, and this is how it has been going on for the last few days. So if I would let's say if I would go back to the time chart on the trading view, okay, so you can see that it is sort of like flirting within this range of 12,800 and above. It just go up and down and things like that. So in terms of individual stocks and companies, obviously what we notice is that the company who does not have tractions are basically based on just stories telling in the past. Those companies basically suffered the most. And primarily, if I want to put it in a comparison, those that under ARK kind of storytelling kind of companies like the Q, I believe, those actually fell more than 50% or more. If you recall, we did some of the companies within the ARK selections. Basically, a lot of companies are just losing money. They do not have revenue, so those companies will basically suffer in this fall compared to companies who actually has revenue. All right. In terms of April, would that be a better month? Based on statistics, again, 50 up years and 21 down years. So there is more up than down. So if you say, do I have a crystal ball? I do not have. But if you want to base on statistics, April should be a better month compared to March. That's how we look at it. In terms of sector performance, there is a very obvious change in terms of sector performance. So let's go into it. Oh my goodness. Okay, in terms of performance, the monthly performance, industrial, consumer staples, material, sort of like gain, has a greatest gain. And then followed by, and then you can see that information technologies, communication, all these are falling behind. Compare that with a year ago. If I would sort by yearly basis, you can see that in terms of yearly, the material, energy, and industrial are leading the pack. So, and then of course you compare that with 6 months again, energy and financial and industrial. So in other words, for some reasons, the information and technology did not really perform as well as we think. Partly also because of the fall in, from late February to March this month. It not only erased off the gain for 2021, but it also erased off quite a big chunk away from the last quarter of 2020. So that's why you are seeing that all these numbers, you can see that, if by monthly, by 3 months, by 6 months, by yearly, technology did not show up on the top 5 compared to what we did last month or the month before. Technology has been leading the pack. So it is now a very obvious change in sector flows already. All right. So what is more important is that what are we going to do next going from here? So this we have already done that before, so I don't have to repeat that. Unemployment rate is still low, which is good. And then non-farm payroll is slightly and add up a little bit compared to the previous month. So, but it's nothing to nothing to shout about. Okay, so this is the debatable issues as it's in our Telegram group, and right now the number is, I think it's 1.755. Is this worrying? I like to think that it is something that is not as worried as what I would thought initially. The worrying issue is basically coming from from January here to February, and then you look at the whole entire March from let's say February here, right? So February to March, this short period of time, we are talking about 0.7% of that gain of that 10 years yield. So what does it mean? I'm not a bond trader, so I don't have that inside informations. But again, based on the the SLR between the Feds and the banks ratios, it only means that the banks are not keen to buy up all these bonds anymore, and therefore pushing all the yield ups. Now, how is it going to affect the stock market? My argument is always this: if the 10 years T-bond yield is really an impact, right, then why is it not affecting DJI or S&P 500? It's only appear on tech stocks. So if I will go with that argument, then my conclusion would be is that the tech stock is basically overstretched at that point of time, because it run up so fast, so quickly, and therefore people are just uncomfortable by this very steep change, in terms of 10 years T-bond yields. So they just want to be on the safe side. So they all move back to something which is more manageable, things which has more tractions rather than stories. So that will probably explain better. So Cheryl, if you are around in this lesson, I hope that will, I fully agree with you on that part. So if you have a different opinion, please please unmute yourself, and I'm more than happy to talk about this 10 years T-bond yield. All right. So that's how I look at it. Now, whether will tech stock rebound because of it hitting certain numbers, I don't think that it will be a concrete numbers that we should be looking at. I would rather see this as stabilized. In other words, like going forward from April to May, it maintains around 1.7, 1.8, very, very gradual increase. I think that will sort of like calm people down. It's not so much of the yield itself. That's my personal opinion on this, right? Inflation, this is the one that if you ask me on a macro basis, this is what I really concern. I've been talking about it for the last 6 months, is the 2% target. Now, once it hit the 2% target, the Fed is going to do something, right? The Fed, now what is it going to do? We do not know, but we know that if the Fed do something, it's going to affect the market. And this time around, it is not going to be S&P 500. It's not going to be just tech stock. It's going to be the broad market, including Dow Jones and S&P 500. So this is actually a more crucial number than, in my opinion, that we should be watching it itself. So back to fundamentals. What are we going to look at it at this period of time? I guess is that if the stock price has come down a lot, including some of the mega stocks like Apple, Facebook, Salesforce, or even tech companies like Qualcomm's, things like, company like that. I think right now the best opportunity to enter is all this company. So to put that into a comparison, right? It is like, when Singapore stocks all come down, right? So what we preach is that, okay, we will just go up there and buy the banks, right? Because in good times, like the banks and all the blue chip, right, it's all expensive and doesn't make any sense to go up there and buy when it's expensive. But when it comes down to a price whereby it is fair value, then you may just want to load up your positions. So right now, the strategy is that if all these big companies with good track records, low valuations, consistent growth year after year, then it makes some sense to park some of the money into all these big stocks, right? And of course, I'm not saying that we are not going to go to growth stock, but I will say that, park some money use all these big companies as part of your portfolio, and that will basically give you a more stabilized type of a portfolio compared to a volatile one, right? Now, over the last 3 weeks, or rather 2 weeks, is what Cheryl has actually mentioned in the Telegram group, is this company, or rather this hedge fund called Archegos. I think he's a Korean guy that lives in the US, and he unload his multi-billion type of a portfolio, and basically the 4 stocks that he unload is RLX, Baidu, VIP Shop, Weipinghui, and Tencent Music. All right, RLX is a company, is the second largest company in the world who manufacture Viper. Those are what we call electronics cigarettes. All right. So he basically unload in a huge amount, and therefore causes a lot of panic in the Wall Street, and somehow or another it affects some of the funds who are actually holding positions in them as well. So why are they doing it? There are many reasons. Of course, Some are saying that they are actually deleveraging. To me, I look at it, it is just a one-off incident. It could be something that he got to deal with the Chinese government. We do not know. But going forward, the way I look at what is happening between US and China right now, companies which is listed in China company which is listed in the US market is something that we may want to be a little bit watchful. So in other words, that if you have already got positions in them, and if get too large, if you want to trim them down, maybe you want to consider trimming them, because we do not know what will be going on after this. Because right now we're only at the stage, I would say the stage 1B of the trade war between US and China, and China is now making US is now making very difficult for Chinese company to operate in US itself. So that's something that we need to watch for it. Again, for this, it is nothing immediate. Usually, this kind of process will take about at least 2 to 3 years to clean up a Chinese company in the stock market. So it will not be something like it's going to happen tomorrow or the day after tomorrow. But again, seeing how the geopolitics kind of things going on, we may just want to be a little bit more careful in terms of investing in China company that listed in the US. Okay, so today I am going to talk about ETF, and mainly going to talk about ETF because seems like right now ETF is probably one of the way to go. And so I'll just go through the 6 ETF that we have mentioned in the Telegram group. All right. Now, before I go into that, I sort of like just want to go back to so-called go back to school, and sort of like share with everyone how do I select an ETF. Now, if you all have actually understand this, hear this from me, there is no difference from what I preached previously. For those who are seeing this for the first time, this is how I do it. The best way to screen an ETF, or rather a good ETF, is through this fsm1.com. And you have this ETF tab over here. And then you go down to ETF selectors. All right. And you'll come up with this, the field for you to fill up, right? To select a particular ETF, for me, what I'll do is that I leave everything blank. I'll just go to specialist sector. If I click on it, let's say if I want to look at fintech, I just need to type fintech. Okay, that's all I need. Leave the rest all blank, generate ETF. See, now I will have just 4 ETF to choose, only focus in fintech itself, just fintech. Now, I will only want to pick one that has larger in fund size. So I just sort it out. I end up with ARKF, iPay, FINX. These are all more than $1 billion. So I just click 3. And the reason why I do not want to select small fund is because usually small fund, the size is very small, the expenses are high, and I'm not willing to pay for a high expenses fund. So I'll just concentrate on big funds, whereby usually they would have more holdings. And because the fund size is large and it can be divided by, the fee that associated with the fund can be amortized to a small amount. Okay, so once I click all these 3, I compare the table. And then I go to performance table. And this is where I will get my performance based on this 3 fund. I can select in 1 year, 3 years, or 6 months. Now, for technology stocks, some of the ETF are really, really new, and they don't have a track record. Typically, what I will do is I will select 3 years, but because technology itself is has a very very quick cycle, they do not have a very long cycle, so we can actually choose 1 year as well. So by choosing 1 year, this is basically a 1 year return at 127.85%, 6-month return, 3 months return, and the number one in the choice is ARK, ARKF, the one by Cathie Wood, right? So this is how I screen a ETF from a particular sector. So in other words, these are what we call team investing. I already got the team I want, and I just key in the team I want, and I basically just select all the ETF related to the same team. Now, they do not have something on an EV. You can see that there's no EV here. For those, we will probably have to do it manually. But if you do, let's say, e-commerce, okay, e-commerce, same thing, generate fund tables. I pick the largest fund size. Okay, again, I only have 4. No, in fact, I have 3 because these are too small for me. Generate comparison table, performance table, 1 year. So I have iBuy, ONLN, and EMQQ. So this is how I will pick the ETF. Now, how do I choose one among the 3? I can base on the return, or I can actually base on the holdings that I have. Obviously, when I open up the ETF, the first thing I will browse through is always how much I need to pay for it. So in this case, this is 0.65, reasonable. I will not pay anything more than 0.9 or 0.8. So this is 0.65, that's good. Then I will look into, all these are all the e-commerce company, top 10 holding. And you can just browse through and see if you like those companies in there. Right? Or I can go to, let's say, this one, ONLN. Okay, this is even better, 0.58. And the holdings are, these are really the big e-commerce, right? Amazon, Alibaba, GrabHub, Chewy, BTSY, so on and so forth. Okay. So I hope all this is clear to you so that you all would screen the ETF, the team that you want, and sort of like just filter down by expense ratios and the companies that you like from there onwards. Right, so just go to this specialist center and it's all there. You can even look at cryptocurrency, alternative investment. I believe this is crypto. I may be wrong, but let's take a look at it. Oh, no, sorry. These are all treasury bills. My mistake. There is no real crypto here. Okay. How much do you actually put in per ETF? Is it US $2,000? It depends on your fund size. All right. So how I invest in ETFs is depends on the total amount of money that I plan to have to begin with. Let's say if I have $50,000, right? And I already allocated $50,000 and I intended to put it in the in the ETF, then what I would do is that I will never expose myself more than 10% of the total amount, right? Because the reason why is that I want to diversify, right? But again, this is only a rule of thumb. This is only a rule of thumb. Let's say if you have a team, all right, a team that you are interested in, or you are expert in those areas. Let's say if you want to do a EV, you want to do an e-commerce, and you want to do a healthcare, right? So these three teams. So these three teams, what you want to do is that you will only invest not more than 33.33% in each team, right? That's how I do my portfolio management. So it's not by absolute numbers. It's not like $2,000 or $1,000. It's not that. It's based on the money that you intended to park only with ETF, and you divide that out accordingly. All right. So I hope that answers your questions. Is this a base on a lump sum? Okay. So yes, it's based on a lump sum. So what about monthly? Monthly is really depends on you. If you're doing a RSP, then it is like, for example, if I take the example earlier on, if I have 3 ETF, A, B, and C, each of it is 33.33%, right? So what you want to do is that if you have only $1,000 to invest, then you only invest only $333 per ETF per month. That's it. So let's say if you want to allocate $3,000, then it will be one ETF per month on a regular basis. Okay. So the only cautions that I want to caution you all is that do not invest too low amount. Because why? Because every trading cost is about $10, right? So let's say if you are only investing $200 on per ETF, the transaction cost itself is already $10. So $10 divided by $200, so that fund deployment is not very efficient going forward. That I have a conflicting. Okay, thank you, Robert. I'll send you the video. So the how we actually invest in it is really depends on your total fund itself. That means before you start investing, you really must have an idea what's the total percentage that you have. On the other hand, if you say that, oh, I don't have a big plan, I have unlimited, I just want to invest on a regular basis, that's fine. The only thing is that you have to allocate the amount per month that you have, and then you divide by the number of ETFs, right? So my suggestion is that you don't break it up to too many ETFs. So for example, if you break it out to $1,000, you divide it into 10 ETF, then I'm telling you that upfront I'll tell you that you should lose money on them. Because why? 10 ETF, 10 transaction, your transaction cost is already $100, right? Only $900 will go into 10 funds. So even if the ETF will have make 10%, then you are not getting a lot of gain out of it, right? So that's how it works. Karen, no, there is no tax. I have to keep repeating this answer to everyone again. There is no tax on capital gain on US stock nor ETF. You only pay tax if you collect dividend. In most cases, what we have, we are investing in US market is because of growth, not because of dividend. If you want to invest for dividend, then Singapore market actually give you a better dividend, all right? US stocks is all about growth. So when we talk about growth, there is no tax implications to non-US resident. People like you and me, as long as you do not hold a US passport, you are not liable to tax, okay? Okay, let me go back to the screen again. Right, so I hope all is clear on here. You all would know how to select the ETF going forward. Now, there are There are other ways to find ETF on this as well. If you can't find the team that you want on this FSM1, then the next best alternative is Google. So for example, I will just Google, let's say for example, I will say ETF for blockchain. And Investopedia is one of those give you very reliable informations, and immediately you will come up with these three ETF that's related to blockchain: BLOK, BLCN, and LEGR. Then what we need to do is, of course, we'll take a little bit of trouble just to look into the fund's fact sheets and make sure it meets your criteria, right? So I already done the work. BLOK is the best among the three. For the reason is because of the fund size. The AUM is 535.9 million, and the other two is just too small. BLCN, you can see that it's only 2.19, and this is only 57.2 million. So they are too small. So if I want to invest in blockchain, I would definitely go for BLOK going forward. All right. Okay, at this point, is there any other questions from you all? No questions. Wow, good. Okay, so I want to, what happened to the dividend from ETF? You will get your dividend, but just that you will take off 30% tax. No, you can't. You have to take it unless there is there's a iron decimated. Okay, can't pronounce the word. There is one ETF that's basically do reinvesting. I do have those information, but I can send it to the group later after the lesson. Yes, there's one or two ETF that do reinvesting. Other than that, the one that we discussed here tonight, no, they do not do reinvesting, and you have to take it up. And because of you taking it up, then that will be a 30% withholding tax. Okay, good. Any more questions? Okay, if no, then it will be interesting to talk about this ETF called ARC series. So ARC series ETF has been suffered a lot during March, and so we don't really have to talk about it again. But what is interesting is that yesterday the ARC X Space Explorations and Innovation was launched last night, and I want to talk a little about this ETF is because so that you all would aware of what's going on. So this is the 38 companies within the ARKX. X stands for space. And then with this ARC, right, there is nothing new. I repeat again, there is no new company that we do not know that has already been in the K, the Q, and the W. All right. So what happened is that ARK Investing Cathy just basically, handpick those companies from whatever she's already invested and make up these ETF. And to be honest with that's my personal opinion. I'm personally quite disappointed with her handpicker. Reason is because the space ETF is supposing to be a very nice team. So from my own perspective, if you're talking about living in space, going to Mars, then we are talking about ecosystems. We are talking about communications. We are talking about low orbit satellite. We're talking about robotics, being able to have deploy robots onto space or to Mars. so that they can build work. They can do robotic farming. They can do water managements, that sort of things. And now that we know that Elon Musk and Jeff Bezos has been launching this, what we call the low orbit satellite, to have this free, inexpensive internet accessibility globally, which means that every corner of the earth will be able to access to internet at virtually at no cost, and not depriving people not be able to access internet. No, with all these systems in place, so the story about this space things is actually very, very nice. But when I look at this ARKX, I'm sort of disappointed. Number one is that I'm highlight all these things in yellow. So notice that the second largest holding in this ETF is a ETF. So it's a 3D printing ETF in the ARKX ETF. So my point here is that if I want to invest in a 3D printing ETF, then I might as well just go and buy the ETF. Why do I need to buy an ETF within the ETF? So that's number one thing I do not understand. Then second thing is that we look into JD.com, Amazon, Alibaba. What is this company doing? This company is doing e-commerce. Okay, fair enough. They are doing some form of AI as well. But their major revenue is still e-commerce. So why are they in there? So that is my second question, right? Then thirdly is that you have Netflix, Tencent Holding, and Meituan. That is even out of the whole entire equations. Because we know that all these are basically servicing service or communications in terms of entertainment. Similarly, Tencent, Meituan, all these are Chinese company predominantly. And let's put this way, even if Tencent and Meituan wanting to do anything with space, it has nothing got to do with the US. It is got to do with the Chinese government. So, so by just one glance looking at all these companies, I just don't feel comfortable. I feel very disconnect with what ARKX is doing, and that's my feeling. Of course, we have good companies like Lockheed, Iridium Communications. Lockheed is basically a company to do the military defense for US government. We have Alphabet, which is Google, Virgin Galactical, which is basically on Richard Branson's space program. So all this makes sense. But other than that, all these companies in there, for a start, it does give some form of a disconnect going forward. So anyway, the closing for last night for this ETF, it was launched at I think $20, and then it was closed at $20.30 last night. So it did not really have a very high volume. It's just like it just go on a normal trading day. That's all. And from what I read today, is that not many people. I mean, people initially was very excited, but when the news broke out and the company was being reviewed, a lot of people sort of like just very disappointed, because a lot of UAV companies, a lot of autonomous technologies are not listed in this ETF itself. So is it worth to look at this ETF in the long run? My answer or rather my personal thought is this: if you do not own any of the ARK ETF and you want to own one right now, then perhaps this will go this will go pretty well. In other words, it will, you have one of the ARK series in your portfolio. But if you already own the K, the Q, and the W, then you probably can give this a skip. That's really nothing exciting in this ETF. Now, whether CACT will rebalance this ETF going forward. I'm sure she will. So we will just have to watch what she's going to add in, what she's going to pull out, and going forward, and we will decide from that point onwards. But at this point, again, I have not so keen on this ETF, right? Now moving forward. Okay. BLOK is basically a blockchain ETF, and that's the only ETF that's made available, and the rest of it basically is not worth looking. And this ETF itself are basically more towards payment currency. I just quickly go through it. 0.71%. So these are the top 25 holdings. None of this company looks familiar to me except this Grayscale Bitcoin Trust. So that's something that I'm familiar. But this is a trust. So this itself is like it's like an ETF already, by the way, Grayscale. Right. So the rest are basically either software company or mining company, technology companies, as they indicated here. So this is the only blockchain ETF that's made available right now. And to answer Denise your question, yes, you can use TA to guide you in, but looking at this chart right now, it's very hard for me to, because the price has gone up so much. The chart itself would have very little. Yeah, if I were to base on this chart, then you may just want to look at the price of, let's say, 50. Probably 50 is a good entry point going forward. Between 48 to 50, that's a range. All right, if you're interested in the blockchain ETF. Okay. Now, cybersecurity ETF, that is the questions that was asked by Robert, and he's not around. Cyber ETF, there is only 3. These are CIBR, HACK, and BUG. So it's the same thing. How I get all this information, basically what I do is that I get it from, I can't remember how I get it. I believe I get it through FSM1. If not, that means I Google it. Yeah, I must have Googled it. I did. So these are the 3 top ETF for cybersecurity, and and again, it go through the same criteria of selecting which are the best of the 3. So number 1 is always expense ratio, right? Given that all 3 have a good performance, the first one is always the expense ratio you watch for. Second is to look at the number of holdings that you have. And of course, if this ETF is outside of US, typically in US ETF they have very high liquidity. But assuming that if you pick the ETF is in Singapore or Hong Kong, then the one step that you need to check is that the liquidity, right? Because some of the ETF has very low trading volume, and don't ever get into this kind of ETF because it's always easy to get in, but very difficult to get out. All right. But in US, most of these ETF are pretty liquid, so generally they are quite okay. Now, e-commerce ETF, I've just now I have already showed during the the FSM1 demo. iBuy seems to be the better one, and if I would look into it as in let's do a search. iBuy. Yep, this is the one. 0.65, and you have all this company like TripAdvisor, Groupon, Revolve, Lyft, so on and so forth over here. All right. And yeah, so this basically is about e-commerce itself. Now, e-commerce is going to be, it's a big topic, and the way I look at it is that it will continue to expand more and more. And not only it will just affect, I mean, it's basically, it's like a mall, right? It's going to take over a lot of the retails, a lot of malls, a lot of product and services, which basically go onto a platform. And eventually, e-commerce is going to be so streamlined whereby there will be specific e-commerce for specific type of service or applications. And all these things is going to tie into a big chain of other things like logistics, supply chain, warehousing, so on and so forth. Then finally is, of course, what we call the iPay, which is the payment gateway. Payment gateway is, regardless of how e-commerce going to evolve, right? You can't get away from payment because somehow or another you need a payment gateway. So with that, let's look into payment gateway, which I would rather look into this sector than other e-commerce platform because let me check. Yeah, if you look at all these payment companies, right, and these are all the big companies that you are probably very, very familiar. And if you want to keep this kind of ETF for for a long term, 5 years, 10 years, that shouldn't have any problems at all, right? So payment is the most crucial part of the whole entire e-commerce world, and in fact, payment is bigger than e-commerce, right? Because it's not just e-commerce, but it actually go beyond that as well. So let's say if you ask me, do I have a choice between e-commerce and payment, then I will always put payment above e-commerce. But of course, e-commerce, the advantage is that the chance for it to grow bigger is much higher than e-commerce itself. So let's say if you go up there and pick, like what we mentioned the last time, if you go up there and pick a company, Pinduoduo, and Pinduoduo is growing like mad, like Jingdong, like growing like mad. So the kind of growth potential that they have compared to a payment gateway kind of company is much higher in the short term. But on the long term, if you want to look at, invest month after month, year after year, then payment is the way to go, right? That's how I would differentiate between the two. Now, the last part is the EV. Someone actually asked, what is the difference between DRIF, KRS, and Hill and iDrive. Now, they are basically two in EV. There are two types, all right? One is the cars itself, and the other one is more towards the service. So let's say, supposing if I will look at DRIF, what am I talking? DRIV, sorry. So this DRIV is in Intel Alphabet AI. This is Intel's chipset, AI, software, AI, hardware, Toyota, Qualcomm communications, Micron is memories, and General Electric is power management, right? So this is DRIF. Compare that to, let's say, HAIL, HAIL. It's called smart mobility. 0.45, that's good. Now you look at this. It goes to AV's budget, which is a car rental company. AG Eagle Aerial System, I don't know what's that. Lyft is a Uber equivalent. Ford, Blink Charging is a charger. Tata Motors, General Motors, New Technologies, Dyna, Trimble, right? Trimble is a GPS company, I believe. So so you can see that they are in terms of EV, because EV is a very big market, it's a very big supply chain. Therefore, it means divided into different sectors, and obviously HAIL and DRIV are completely two different objectives. And you can see from here is that in terms of sector, this is more on industrial and consumer cycle, right? So the two ETF, although we are talking about the same theme, the investment sectors are completely different, and you have to decide which one do you like most. All right, there's no hard and fast rule, because at the end of the day, both are doing well. And from a investor point of view, you want to know which one of it will give you the best mileage within the shortest period of time, right? So let's say, supposing if you see that Tesla, the technology side of things, is the one who's going to, allow you to reach your objective faster, compared to other companies or other investment, then what you want to do is that you want to park your money on a fast track, right? And allow it to make the gain that you want to make, and then you take out the money and you recycle it and you put it into other sectors. So it all depends on how you make those comparisons, what is objective, and how you treat investment is going to be. Right? So let's say for most of us, if we do not have time and we just want to look on ETF more of a passive investing, more on a regular, monthly kind of a RSP type of a method, then it's probably worthwhile to pick something which allows you to have a visibility, rather than, more on the technology side, which a little bit more volatile. So for example, I would never go, I would just be frank, is that I would never go RSP on ARK, that's for sure, because ARK investment paradigm is only 3 to 5 years. So let's say if I want to do passive investing and not knowing what's going on, right, and you may be just throwing good money away month after month without knowing what are the changes. So that could be quite dangerous, compared to something which is more foreseeable in those areas. Okay. Up to this point, is there any questions? No questions. Y'all can unmute. Don't let me talk alone. Okay. There's this website that I found recently, which is quite good. It's called Head-to-Head ETF Comparison Tool. Let's say if I would do a drive and a hill, click a compare. Then you will show up the parameters side by side. All right. I can see the holdings. They even give you graphical display on the number of holdings. Their top 10 assets consists of 28%. This is 24. And they show you the companies that they have invested. What are their weightings in the ETF itself? You can click on their performance. It will show you how they perform. So these are more of the fundamental comparisons. So we are not only looking at on the technical chart, but we are looking in terms of more towards business analysis and quantitative analysis. Okay. So these are some of the things. This is actually one of the good websites that you can use to make those comparisons as well. Okay. Okay, now we go to company. Company B. Okay, so company, the first one is BYD. I believe I'm not sure who actually point out BYD. So which ETF, EV ETF is according to my objective? Is there a lazy person way to propose if I want to expose to ETF? The first one, DRIF, if you want to go with that, because of all the big brands are there, big companies are there. The Intel, the Qualcomms, DRIF is there. Okay, Dennis? Okay, the first company is BYD Auto. So this is another catty baby. Now I look at their, I pull out their financials. The first thing I look is the revenue is climbing, and then their net income is climbing. So it looks good on the surface, but as I dig deeper into it, that is scared the hell out of me. This company, this BYD, is has a PE of 304.97. So I cannot compare BYD as same level as Tesla, all right? Based on the informations that we already know, BYD, they make trucks, they make buses, EV buses, they make batteries, and they make face masks. Your face mask is they have a business itself is make face masks. So BYD itself are not really a true auto company. They are on a different leg compared to a Tesla, a NIO, or a Xiaopeng. So they do not have, or rather they do not have the freedom to have they do not have, or rather they do not have the entitlement to have a 304 as a PE. Their PE should be all in this region. All right. And of course, by knowing this PE is so high, the next thing I do is that I go and dig into details. And I realize that they actually, their earnings are so little. And because of the earning is so little, that's why the price divided by earnings, and the earning is low, the numbers become very high. And I'm just struggling to understand is that with BYD as a company, what kind of products have they come out, or cars that they have? And to be honest, I could not find anything exciting at all. And I'm actually quite surprised that BYD is one of the Cathy Wood's company that was actually put into his ETF as well. Although it's a very small amount, the weightage I think is only 0.7 or something like that. But still, if you ask me, BYD is nothing. I would say nothing exciting at all. In terms of ARKQ is the ETF. They are in bus, they're in battery, and they make masks. If I would use a fair value to, a typical DCF kind of old school valuations on this company itself, because they have long terms of track records, their share price is $170 Hong Kong dollars, as in on its fair value, which is in line of what they are trading right now. So how do I find? Karen, yes, I agree. I agree with you. You see a growth story on battery, but then I would really like to compare with other battery manufacturers as well. So, by the way, BYD, I couldn't find anything in the usual website, so I have to go to AA stock, which is basically looking at the Hong Kong stocks, and the ticker is 1211. So I click on that. So it's trading at 164 today. He has been going all the way down for a longest time, and if I go to fundamentals, and I go to financial ratios. So this is where I get all my chart. And you look at their profit margin, pathetic, 1.99%, 1.33%. Given a company has such a long historical background, and Warren Buffett was once upon a time a major shareholder of this company, the kind of results that they have is really disappointing, and I do not see any future with this company to begin with, other than they making bus and truck. I do not see any catalyst, let's put it this way. Now, if you are looking into investing in battery, then I will just mention there are only 3 companies that make batteries for the world right now. The 3 major manufacturing. One is LG Chem, it's a Korean company. Second one is Panasonic. And the third one is this CATL, is a China company. All right, CATL is a code of the company. So these three companies are making batteries, and Tesla has somehow or another working with them, with these three companies. BYD has played a very, very little role in this battery game. So their major role, unfortunately, are still in cars. Or sorry, it's still in EV. And they're not in cars, they are basically in truck and buses. If you go to Shenzhen, you see all the public buses, they are mainly BYD. All right. So so that's a very quick summary of what is BYD is, what kind of company they are. So if you are investing for because of battery, that is not a good reason to go to BYD. Okay. NIO, I think we talked a lot about NIO for a longest time. So now it's not about NIO anymore, but rather it's like what price can we get in? Okay. Let's go into what price can we get in. It's more practical than talking about the rest. Okay, so this is NIO. NIO is somehow we call it neither here nor there right now. We know that NIO will somehow come back, but is this a good price to buy or is this a good price to sell? NIO is in the region whereby it is neither here nor there. There is no conclusion. What we can say is that if you look at this pointer, that point over here, it shows about 28. I would say that if it is a good buy, I would buy at $30, $29 to $30. I will enter NIO at this point. This will be my support line. I would not do anything over here, although it shows that it seems like it is on the support line on the decline side, but because it is on a bearish support line, right? Then, and if I'm going to long this company, it doesn't also make any sense for me to buy anything here. Okay, so what I would do is that if I'm really interested in this company and 100% convicted with this company, then I would say, okay, I will buy some here. And if it does fall further, then I will add more at this price, which is $30. That is provided if you really want to buy this company. If not, then it is always good to wait. Like I said earlier on, right now it's not, some of the companies, their price has come down to a point whereby, although it's attractive, but the bigger companies like with the track records seems like to be a little bit even more attractive. So you may just want to channel the funds over to the other side than to look at, the smaller one, especially like, company like NIO. In this case, it is neither here nor there. It's really very difficult to make those decisions, right? Now, will it come back? I am pretty sure that it will come back. I'm still a believer of EV. The EV market is not fully grown yet. So, so if you're already holding all these EV stocks, just hold on, and I believe it's going to come back soon, right? But if you want to average out, yes, you can average out at all these low points so that when it bounce back, you can actually capture the gain as well. Okay. The next company is GM. Interestingly, GM is an efficient company. I think you asked these questions, or can't remember someone. Yeah. So this GM is a very interesting company. As I was looking at the financial, they are doing actually, their revenue actually falls. They actually building falls, but their EBIT, so their margin actually increased. They increased. So that actually sets me to look at this GM differently. So GM cannot be treated the same as a Tesla, a NIO, or Li Pen. They are totally two different types of company. The GM is a company that GM, Toyota, Volkswagen, all these companies, you can definitely use the old school what we call valuation method to value the company. All right, so that actually gives us a very, very good pictures on how this company works. And GM tends to be very, very efficient. Now, I went into the company and I found out that GM plans to launch 30 new vehicle EV by 2025. And that is a lot of cars. That is, you are not you. Sorry, someone actually asked. Okay, never mind. So 30 EV by 2025, that's a lot of cars. So we are talking about from now until 2025, every year there has six models, right? 5、6、30, yeah, 6 models, or in fact 8 models per year for EVs. And that becomes very, very, very aggressive. So we can see that GM is fighting very hard, to come back to the market. But whether can they achieve or not, that is something that we have to give a big question marks. Because if you look at Tesla, if you look at NIO, if you look at Li or Xiaopeng, the cars that they make now, the lineup that they have is not more than 6 models. All right, not more than 6. And we are talking about they have been working on those EV since day one. All right, since day one. We are giving GM the benefit of doubt is because they are so familiar in making cars. But I will be very doubtful that they are able to make 30 EVs compared to NIO and Tesla and all these real EV companies, because the technology are completely different. The manufacturing process are completely different. The engineers and the technologies are completely different. So we do not know how extensive their EV is an EV, right? It could be a hybrid, it could be something they say is an EV, but it's still mainly on engines, we do not know. But this is what they claim. Revenue down 2020, net incomes go up, EBITs go up, means that they are efficient. The problem with all these cars right now is the chipset shortage. And going by the industrial standard, going by what I already know, chipset shortage can last as long as 9 months to 14 months. And if this is going to drag on, it's going to impact GM bottom line. All right. PE is 12, is good. PB, price of book, is 1.78. Price to sales is only 0.66. So these are what I would call a value stocks, a value stocks for that purpose. And the little diagram that you look at the bottom, I get it from Wall Street's this website called Wall Street Bear or something like this. I can't remember. And the fair value for this GM is priced at $36.47, and right now it is trading at 55. So it is not really overvalued. And if you look at the GM as a company and you want to invest in it, I would say this will be I would say this is close to a value stocks. Simple Wall Street. That's correct. Thank you, Raj. This basically I got this from Simple Wall Street. So if you register this yourself or your name with Simple Wall Street, you are entitled to have 5 companies each month, whereby you key in and then they will give you all the valuations report free of charge. Right. So that's Simply Wall Street. So this is how I get the information from that. All right. So GM is one nice company. I believe Ford fall in the same category as well. That's why over the last 2 weeks, the GM, the Ford, the traditional cars company has sort of like inched up. Of course, not as crazy as Tesla, but they do have quite a bit of upside going forward. The concern again is the chipset shortage, and we do not know how many cars will be affected because of that as well. SunPower. So SunPower is a solar panels company. I am not sure who actually put this, but this company really looks yeah, this company doesn't look good to me to begin with. So let's look at what they do. So they are doing solar panels, and they are mainly for homeowners, some businesses and things like that. They build solar panels, they install, and then they have energy storage in in terms of batteries, in terms of storage systems. So this is basically what they do. I personally don't really don't like this kind of company for a major reason is because these companies are very asset intensive. They deal with projects, they deal with installations, they deal with warranty, they deal with homeowners, right? And typically this kind of money is very difficult to make, and it's also very difficult to scale up, right? That is my personal perceptions in terms of project work, in terms of how they deliver their service. So instead of just looking in SunPower, I sort of like go into Findis, SPWR. Okay. And you look at the, and these are basically the fundamentals of here. The price to sales is 4.59. PB is 13.30. The EPS to date is 3.2. It doesn't look that bad, but then again, if I would make this comparison, let's say we click onto solar, and we start to make this comparison, right? And just now, this company is market cap 5.16 billion. So we want to pick something in a similar range, in close to 5 billion. So we have companies like Array, companies like Canadian Solar, Solar Edge, SunPower over here. Okay, we pick. Let's say we pick something which closer to it. Let's say we pick SHLS. That is a new company. So we can see that just now is a single digit, right? Now this is a double digit, so it means that this is over value. The price to sales ratio It means that for every sales that you get, the price is really high. And this number, if it goes high, right, it means that usually the stocks mean it is expensive. So we want to rule that out. We look at another one, array. Okay, so this is 4.18, all right, but it does not have a price to book ratio, so it could be a negative equity, right? It could be a negative equity, you see, so there's no numbers appearing. So this is basically how I would make comparison. Supposingly, if I come across a company which I totally not familiar, I will make this kind of comparison and see whether it makes any sense or not. So like, for example, this is 0.35 and it seems good. And the PB is only 1.31 with the EPS, it looks really positive. Now, so yeah, so I will probably look into this company. By looking at the numbers over here, it seems to be attractive, although I have not really done research in this company, but this will definitely will catch my attentions over here. So this is how I compare, one company from the other by using this Findis to do it. The only things is that now for this type of companies, right, if it's on the growth projections, in other words, we are not talking about companies which like GM or Toyota or Ford. What I would base on is basically based on price to sales ratios, and this number has to be lower, the better compared to its peer, right? If this number really go extremely high, that will be something that I will be very worried about that, all right? Karen, you asked about SunPower. There was a coverage in media last year. The energy companies and SunPower was brought up as a company to watch for, together with Next Era and others. A lot of solar company, hard to choose. Yeah, solar company is not easy to pick because, as I said, the solar company as a whole, is very capital intensive, and you can actually relate to something closer to home. Like, for example, if your condominiums, your HDB, and they want to say, okay, we want to put up a sustainable energy solutions up there in the roof, what you'll do? You will call for tender, ask for contractor come and quote, and then they will quote the price. They will do the install, and then if the things doesn't work, you will call them and you will scold them. They will come and do maintenance on a regular basis. So you can see that all these are very labor intensive, capital intensive kind of business. It's more towards a building contractors, but it is brand under what we call a solar, beautiful name. But the job that goes into it is just basically a contracting job, right? What's so big deal about solar panels? There is no big deal about solar panels. But if you're telling me that you are developing a power management software systems, that is different because you are building a platform. But if it's just, buying equipments from China, and assemble that and become a solutions, that this kind of company really does not interest me a lot. But it is a big thing in Germany and in US is because right now Biden is pushing for green energy. Green energy. So there is a lot of initiative, a lot of money pouring into these sectors, and probably there will be a lot of incentive for the American household to install solar panels. But then again, that is something is more towards it's not something that I'll be very, very excited about for that matters. But But again, I want to differentiate between what I've just mentioned and the big boys playing. So for example, like Tesla do energy storing as well. So they have this big piece of land in Australia, and basically it's a big bank of storage. They harness their energy through winds, through sun, and they store those energy. And it becomes very useful, especially like this time around when Brisbane is having, flooding and, rain nonstop for 3 months. And all this energy are being put into good use into this power grid. Yes, for that purpose, these are the big projects that will actually part of the Tesla ecosystems. Then there's money to be made. But if it's just a small company, doing system integrations, that's really not very big. Now, another thing to look at is, maybe I'll just go back to this. You see, these are solar companies, right? All solars. You look at their market cap. The biggest market cap you can find here is 13.7 billion. 10 billion. 13.7 billion. 13.7 billion, my goodness, is small. In US market, this kind of market cap is considered as small cap. So really is nothing to shout about, given the kind of growth potential. If I want to invest it month after month, year after year, there's nothing worth to look at it. That's my personal opinion on this. Same thing, Ni Energy. This one will be slightly more interesting. Let's look at the company itself. So this is a wind and solar energy. All right. And these are what we call a bigger player, and they have what we call the technology in it. They basically have the technology to build the infrastructures, the engineers, the software, the power management systems, so all into one. So these are different compared to the previous company, and we can actually go into this again. See, this part under utilities and regulated electric. So these are bigger players really compared to just now. You can see here, all these are ranked among the $1 billion company. Right. So there's a lot of difference. So we don't just compare with one parameter and say, oh, energy is all energy, but we have to find out which sectors are they in. Are they the big players, or are they infrastructures, or are they just for just a simple contractors? So there is quite a difference between the two. So these are the Ni energies. The price to sales ratio is 8, is pretty high. Consider the fact that the rest is all in the region of, let's say, so this Ni, right? Next era. Let's say we pick something which is American power companies. See, the price to sales ratio is only 2.81. Right. So 2 to 4 is probably about right for this type of industry. And right now, Ni is doing at 8. Simply Wall Street is showing that this fair value for this company is at $42 to $50. Whereas now is trading at 74. So this is the energy sectors. All right. Now I put a star. Did I put a star over here? Yes, I did put a star for this company. Meaning to say that this is the company that worth looking at. GM, GM, GAMF Holding is a Apple management software systems. So I'll just play a video also because this video actually explains everything.
Today's workers and students demand a lot from their technology. They expect to access resources from anywhere at any time. They expect to be able to collaborate instantly. They expect to have a choice in the technology they use. Whether deploying Apple devices to offices, hospitals, schools, or homes, Jamf preserves and extends the native Apple experience that people love. Jamf's integration with Apple deployment programs provides a scalable, zero IT touch deployment right out of the shrink-wrapped box, personalized for each individual. For apps, automate installation, management, and tracking of App Store and third-party applications, and target and distribute apps to individuals based on their exact needs, or empower users to install pre-approved apps and device settings themselves through your customized App Store, eliminating common help tickets in the process. Take access to resources one step further with cloud identity-based authentication and enable users to easily and securely connect to enterprise resources with a single set of credentials. With devices deployed, Jamf goes to work identifying Mac-specific threats and providing real-time alerts so you can proactively block, isolate, and remediate vulnerabilities, both for known and unknown malware. Jamf.
Okay, so this company is what they do is that they specialize in Apple product enterprise solutions. So they pre-install all the enterprise software into these devices, and these devices will go to either their employers or their contractors or their vendors, and so that when they open up the boxes, they can start to use all the applications either on their iPad, MacBook, or their phones. And this is a very new company, and they I think they just started about 2 or 3 years ago only, and they are getting a lot of tractions. Now, by doing that, companies can track. There's an administrator; they will be able to track where does the device go. Do their vendor or their employees will need to upgrade their software or include a new modules into it. So it's a kind of a software management systems that this JAMF is providing. Now, the competitor for this company itself, this company is, by the way, is not making money, but it is narrowing the losses. Okay, in other words, their loss per year is narrowing. So when it comes to a point of time, like what we talked about growth stocks earlier on, is that when you see they are narrowing all the losses, and at one point of time when they start to make money, right, this is where they will scale up very, very, very quickly, all right, going forward. So I put a star here is because of all the company that we are looking here tonight. This is probably the most promising company that I will say, hey, guys, go up there and let's dive deep into this company and to look at it if this is a multi-bagger company, all right? So, and same thing, what I do is I do a comparison. I did a comparisons and I found that there are other companies who do the similar, that provide a similar service. One is IBM, one is VMware, and the other one obviously is Microsoft. The difference between JAMF and this company is that all these companies, as you can see, they are on a very big scale. Whereas JAMF is only focused on Apple products, right? Enterprise that use Apple product. So they probably will have their niche compared to the other player as well. So we will have to dive deep to know what they are doing. CVE is I can't pronounce this. I think it's pronounced as Synovus Energy. This is old school dirty energy lah. They are ranked among BP, Chevron, and things like that. They are on capital corp type of a business. They are not doing well. I really do not know if there's anything worth to look at it, because if I start to look at all these, what we call the dirty energy, that's already off my list. But if you guys want to invest in this sector, then my suggestion is that you still look at the biggest company in this sector is Chevron, ExxonMobil, and BP. These are the three major ones to look at, and they pay pretty well, good dividend. The dividend that they pay out is in the region of about 5 to 6%. This kind of companies, it doesn't fall into the theme of our discussion here, which we want to pick is a growth stocks. Let's put it this way. If we are not investing in capital corp, then we shouldn't be looking at this company to begin with. Right? Airbnb. Okay, and then this is your questions. Okay, Airbnb is not making money as well. In fact, their revenue fall is because of the coronavirus. They have horrible margin and things like that. So their finance looks very, very bad. Okay. And to do an analysis on Airbnb is that we go back to the history and we say this company IPO at $68. And then it jumped all the way to 174.4. So the IPO, I believe, last year. And right now the price is sitting at 174, and this is their book. So my question here is that what is so big deal about this Airbnb sorry, because the other screen is gone down, so I don't know what was the chat here. Just a minute. Okay, never mind. Someone has typed something on the chat box. I'm not able to read it. I will read it later. The Airbnb, so this company was being listed last year during a pandemic year, and the price shot up to 174. No doubt about it, confirm that this is overvalued. The question here is that how do we know it is overvalued? How do we know? And what is the price to get in if we are interested in this sector? So we have to compare to a similar platform, which is like Airbnb, providing the similar service, and we make comparison with them. So the comparison that I make with them with Airbnb is Booking, BKNG, Trip.com, HLT stands for Hilton, EXPE is Expedia, HLT is, let me check. HLT is Hilton. Then H is Hyatt, sorry, yep. And MAR is Marriott. Right, so we compare with these 1, 2, 3, 4, 5, 6 platforms. So let's look at H, which is Hilton. Price to sales, 4.05, PB 2.63. right? Not making money, right? The return was bad last year, expected, but at least it is not overvalued compared to, okay, we Marriott. Price to sales 4.5, PB, this is really higher. So this is definitely overvalued. Compared to Trip, so this high, overvalued. And the last one is Booking. $13.74, which is high as well, right? So by making this comparison, we roughly know where is Airbnb is sitting, and going by the Simply Wall Street valuations, we should be looking at fair value between 80 to 110, and right now it's trading at 174. So it is definitely overpriced right now, and so I wouldn't be keen to look at it at this point. But if you ask me, among all, what would I pick? I'll probably pick Hilton, the one which has a lower price to sales ratio, or the one which has a lower PE. This is how I will pick. And given that all these companies are pretty much established compared to Airbnb, they are new. Let's put it this way, Airbnb, what do they have? They don't own the assets, they are only a platform, very similar to some of the hotel website that we use to book our vacations or business travel. Is the same. There's no new catalyst on this. So I wouldn't touch Airbnb at this price, that's for sure. Okay. Okay, so I guess that's sort of like finish all the company that I have today. I would really want to open the rest of the time for discussions that what you all have in mind, and what are the things that you want me to go through, and then we can sort of like dive deep and look into one topics in particular. You can unmute also right now. MM right now is 187, yeah, but I still won't be keen to look into this company at all. It's too expensive. $68 at IPO, and then jump up to 187. I won't even FOMO it. Yeah, it's not something that I'll be interested to look at it. Any questions so far at this point? Today everyone is quiet. What is there any reason, or is it because I speak too fast, or is it because I'm not clear?
No, it's because the markets have opened in New York, Jimmy, and everything is going up.
Okay, good. So you're monitoring the market. What's the price right now?
The JAMP has gone up by 2.6%. I pay 1.18% since you started talking, and RKK 3%. So things are looking positive.
Let me look at the other screen. So yeah, everything is going up and it's pretty bullish. Downs, Russells. Okay, so it's good. So you guys want to go back to look at the market, or shall we have this discussion further? Now so what happened is over the last last 1 month, as I said, is been, I will use the word pretty shitty, pardon my language. But we know that the market is not continuing to be like that. It will eventually rebound. The question is when. For me, right now, personally, I have not done much over the last 2 weeks, except that I have increased my positions on the, the heavy weighted boy, the Apple, the Microsoft. I have increased my positions over there. I have also increased 1 or 2 positions on the small cap, the one that I believe is very, very strongly in them. I sort of like double up my positions and waiting for the rebound. The one that I did not do anything is the ARK. So I have ARKW, which is the internet. Right now, today, it has fell to 30%. So I was actually waiting for the ARKX to come out, and so that I can make that comparison. But as I mentioned earlier, the ARKX is really disappointing. So I may have to relook at ARKW again to go in so that I can average off my price. Other than that, I'm not doing anything at the moment. Going forward.
There's a lot of talk of Biden passing a big infrastructure spending plan.
Yes.
If that happens, which sectors do you think will
Clean
benefit?
energy.
Clean energy.
Yeah. If you are looking at ETF, that would be QCLN.
QCLN. Yeah, I have that already.
Yeah.
Yeah.
So that is the big one. So what Biden is going to do is that because of this simulation program, clean energy. Now let's be clear about this. Clean energy is definitely going to be a global effort. In fact, if you look at Business Time last week, the government is talking about ESG investment, environmental, sustainable, and green. So it's going to be a global effort pouring into these sectors, and we will just have to go with the flow, going forward. If you ask me, something that we can't predict and it can become a loose cannon is the relationship between China and US. So with that happens, we somehow we will know at some point of time, if their relationship get too bad, then certain stocks in the market, if we choose not to own it, we may not want to own it. For example, Alibaba will be the first one. I will probably very hesitate to own that stocks.
It would be interesting. It would be interesting, perhaps, if other people also find it interesting, Jimmy, is that when we next meet, to understand what an ADR is, because NEO and other companies are quoted as I think, American Depository Receipt. What does that mean in function would be interesting to understand.
As long as you are a foreign company, you are listing in US market, typically you'll fall under the category called ADR. All right. Or it can be fall under OTC, over the counter. And you trade under a different exchange called AMEX, AMEX. So that's basically what it is. So why is there a big dispute right now is that the exchange has a set of rules and regulations and accounting standards they need to comply. They have been requesting the Chinese company to make sure that they comply to the accounting standards. So far, from what I read from the media, is that the Chinese company has not complied any of those standards. So in the past, it could be the case whereby, when the relationship is good, the US governor just, keep one eye closed and let things just move on. But right now, because they are in the technology competitions, and there is a political motivations for them to go up there and say, I don't care, I don't give a shit. This is what I do. This is what you need to comply. And if you don't like it, you can always get out. And this is basically what's happening right now. So you can see that Baidu has been do a dual listing in Hong Kong. Bilibili, same thing. It's a social media apps. They have now moved to Hong Kong as well. And basically this company, they are taking steps and preventions in case that if the exchange come down hard on these companies, then they would, then they will have at least the secondary market to, to be there. That's how I look at it.
Hey, Jimmy, I have a question. Just taking the subject over to blockchain technology. So that's an area I'm interested in, obviously, besides buying Bitcoin and those cryptocurrencies. I think block sounds really interesting, but I'm just really curious. For instance, US-China trade war, do you think it has impact on blockchain, like block in general? Because the price has sort of gone up again, and I'm just wondering when is a good time. I mean, obviously we don't time the market, but do you reckon there might be a fall? How would all these things happening right now impact blockchain?
Okay, I first of all, I have to declare I have limited knowledge on blockchain technology, but I somehow or another spent 2 months or 3 months looking into the subject, so I more or less guess. I use the word guess what's going on. So blockchain is a technology, and coins are basically tokens. If we are looking at Ethereum, we are talking about Bitcoins itself, then we are talking about money, like value and things like that. But if we are talking about blockchain itself, then it is technology. And these technology are being used to solve a problem. So right now we have about 4,000 to 5,000 tokens or coins made available in the market right now. All these coins have different purpose. You think about this, put it into a real world that we now see each other. They are like your S&P 500 companies. And each company serves a purpose. They are doing certain things and they contribute to part of the economy. The blockchain world is the same thing. The coins are being made to do certain functions in the blockchain world, and they are there to solve a problem. When we invest in the token, it is as good as we are invest in the growth of the company, right? So let's say, supposing tomorrow I do an ICO, and the ICO name is called Jimmy Chai. And this Jimmy Chai coins is there to solve a problem. Meaning to say, let's say, and this is something that I already know. Let's say I say, anybody can now buy Google share, right? So Google share right now is trading at what? $2,000, I think. Okay, let's assume it's $2,000. I say everybody can buy a Google share, can have a piece of Google shares. And that's what my coins is doing. What I do today, to buy 1 shares of Google, I need to have 2,000 US dollars. So we are depriving people from the third world, from the underbanking world, not be able to participate in the wealth accumulations. We are depriving them, right? So while the rich country, the developed countries, they continue to accumulate wealth like crazy, the poorer country, they never have a chance to participate in this growth process. So my coins is going to make Google shares to be divisible. Meaning to say that the person who come from a third world country or developing country, if he has only $10, or maybe even make it smaller, even $1, then he can buy 1/2,000 divisible Google share. So am I solving a problem? I am solving a problem, right? Because I am solving a problem whereby I am allowing people in the developing countries to be able to participate in share investment. And that will actually help them to grow their wealth. So if I am able to solve these problems, I'm going to mint all these tokens, these tokens that I have made, so that I can pass on to everybody to say that, you participate in my tokens, you participate in my company, then you can start to use these tokens, the solutions, to go up there and invest in the stock market even with a small amount of money, with little cost, virtually cost them nothing. There's no transaction cost, there's no exchange, because everything is done through blockchain, peer-to-peer, and all that ledger has been, been recorded in the whole entire network through the coins to the system that I built. So that is basically what blockchain is about. They are there to solve a problem. And when you invest in that token, you are investing in the solutions. So mirror that to a real company is the same thing. If you are investing in, you're investing in Tesla, they are there to solve a problem, EV problems. And when Tesla continue to grow, same thing, the coins will continue to grow as well. So that is what the blockchain world is talking about. It's not about Bitcoins, it's not about Ethereum. I know a lot of people has confused about cryptocurrency and blockchain, but they are two different things. And right now, the biggest player in this area, in terms of coins and tokens and exchange, basically it's only two countries. One is China and the other one is Korea. These two are huge players. So I hope that answers your questions. I know that it's not a very scientific or academic answer, but I hope you get the entire concept. I'm personally still studying it, so I wish I can share more, when times are more mature. Yeah. Okay, anyone else? Okay, if there's no questions, we are now 10 o'clock. Thank you very much. And I appreciate your time spent with me tonight. And so the market is really running up. So I think we all should go ahead and check the market. Yeah, Raj, thank you so much. Yeah, appreciate it. All right, bye-bye.